Good day, fellow investors. We recently discussed REITs in a deep investigation on the risk and reward of investing, and there was a great comment by Rob that asked, Sven, in this video you say it might be better to invest in real estate myself rather than invest in a REIT. But if I buy a home with a down payment of 10%, I'm leveraged 90%, which is worse than the leverage of most REITs. And if I buy real estate, I must improve it, manage the building myself, or outsource an external company, which costs either time or money. So you worry about the leverage of REITs you discuss, but you don't worry about 90% leverage if I buy a home or an investment property. This seems contradictory to me. UC says that he is selling his properties, but when you own your own property, you make higher returns than the 5-10% you get with the REIT. You can check this video for an in-depth investigation into REIT investing now. And I want to discuss this because I think it is really core to what this channel does and investing there. Real estate investing versus REIT. We can discuss leverage, we can discuss management, and also the key factors when it comes to investing in real estate. Cost of capital, cap rate, potential competition, etc. Let's start immediately. First, down payment. The down payment, it's up to you. You can invest 10% as a down payment, you can put 50% as a down payment. But then again, if you invest personally, the key factor to understand is that you understand how to manage that debt. If you have other sources of liquidity or whatever, who knows, then you might push it down to 10%. If you don't feel cool, you push it to 50%. As I said, it is up to you. The down payment is up to you. It's not that you must be 90% leveraged. So that's a bit contradictory, Rob, no? I have a friend that invested in Miami beachfront property in 2007. He put about 600K in that, leveraged by the bank. When prices went down, the bank simply erased the 600 and he was left with a big zero, and that was a tragedy. But you have to see whether you can manage something like this happening, such a crisis. So it is about you, how much risk to take and how much to manage. Now, the management fee, I think when my mother was renting out something in the Netherlands, was about 8%. So you have to make the calculation. What's worth to you? What are the returns on investment? And you don't think there is a management fee with a REIT? Well, there are, and huge management fees. You'll see a little bit later. The management fee is the difference between the cap rate, the income from the property, and the dividend yield. That's a huge difference. For example, this is the cap rate from realty income, and now I think we are at around 8%. So realty income invests in businesses that offer 8%, plus they borrow, thus there is even a bigger return than 8% on that, and the dividend yield is 5, let's say 6%. So with the leverage, let's say that realty income is getting 10%, even higher, likely 14% returns on that income, let's say with higher rates 10%, and you are getting a 5% dividend. The 4 percentage points difference is huge, a huge fee, and that's why I'm saying better to buy your own property with a cap rate of 8%, getting 8% on your money, than investing in a REIT with dividends that are 4 or 5%. So that's also something, but let's continue with this real estate investigation and categorize you as a real estate investor. If you have less than $1 million, I think that the key factor there should be you're repairing your own toilets. That's the highest possible return on investment you can get. If you invest $100,000 in a property, you refurbish it, prepare the toilet, you sell it for $200,000, or you make a profit of $100,000. That's 100%. From REITs, you will wait 20 years now to get 100%. So Hello, good morning. If you have more than 1 million, then you're a sophisticated investor, and then you can have other people manage your property, and then you can have buying directly at the top cap rate without all the things that come between you and a REIT. If you don't want to do anything, be happy with a 4% dividend yield from REITs. There is nothing wrong with it. But then you also shouldn't spend time watching YouTube videos. And that's where the trick lies. Just received an offer from a friend to invest in a residential property in Milan, 9% projected yield, long term, pretty safe, fixed leverage, nothing wrong with it, great company. So if I had 1 million now sitting on my bank account, I might even do it because this is something that I think will be there for my grandchildren or foundations, whatever we do. Further, the difference between REITs and yourself. REITs invest, grow, 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 because that's what the management is paid for. Let's take over Spirit, let's make an acquisition, let's be big. When do REITs spend the most money? At the peak of all real estate bubbles. Here they make acquisitions. Here they manage debt that they issued here because everyone was yelling, swing you bump, we make money, we are rich. But here nobody's buying, everyone is running away. Here everyone is buying on free money. And then I'm asking, you want to invest when the supply and demand of real estate is in your favor, or when every crazy freaking REIT is chasing property like crazy and investing? I was buying property in 2015 where there was a sign on every 10 meters in the Netherlands. And I did a great return. We bought then another property here in Slovenia before the boom started. And it's crazy what happened to prices the last 2 years as people get scared from inflation. The office I'm in was on the market for 2 years. Nobody wanted to touch it. And then the price went down, and then we bought. So that's how you buy real estate. And I firmly believe that you invest in real estate a few times in your life. You do it when the time is right, when the opportunity is crazy, when the risk is low, and then you have something to leave for your grandchildren. Everything else is too risky. Thanks for watching. Check for low risk stocks on my research platform. Check it out, see whether it fits you, and I'll see you in the next video.